welcome to this special event on the value of the AA1000 series of standards, and really talking about the value of those standards to sustainability management and practitioners in Australia and New Zealand. My name's Alan Day. I'm Managing Principal for Point Advisory's New South Wales first office, and yeah, great to have you all here. Importantly, and Glenn, not sure if you've been involved in Australian-based events, but an important thing that we do is acknowledge country, and acknowledge that we do, for those of us that are connecting in Australia, acknowledging that we meet together and join in from different lands. I personally am joining from Bejigal land of the Eora Nation, which is just south of the Cooks River in Greater Sydney, and want to acknowledge and show my respect for elders past, present, and emerging. We certainly invite you to acknowledge the country that you're on in the chat, if you'd like to. We've got a practical agenda, a valuable agenda. We've got fantastic speakers to talk to you about the topic of the day, and I won't spend time going through this, but we want to give you an overview of the AA1000 series of standards for those that aren't overly familiar, and really go into a conversation around the value of the series of standards and what they have to offer. What do they mean for sustainability management and practitioners? So I will pass over to Paul, and introducing Paul, who is the founder and principal of Think Sustainability, with 40 years experience in sustainability, communications, consulting, and science. Paul recently launched Think Sustainability to offer his skills and knowledge in helping organisations to significantly step up their sustainability performance. Since 2007, Paul has applied the AA1000 principles and series of standards to assist the embedding and delivery of sustainability outcomes with clients such as Telstra, Westpac, Newmont, Newcrest, Hydro Tasmania, Brambles, Sydney Airport, Macquarie Bank, Stockland, Mirvac, Fuji Xerox, Charter Hall, and Bupa. Paul has also led over 40 AA1000 assurance assignments for reporting clients. So with that, I'll pass over. I'll stop sharing the screen and let Paul share his slides.
That's great, guys. Well, thanks, Alan, for that intro. Let me just pull this up. So good afternoon, everyone. These days, there's a plethora of sustainability and accountability frameworks available in the marketplace, and some of those frameworks you may well be familiar with or even currently using with your organization. So they're not only available, but...
Could you put that on presentation mode for us?
Yep. Let me just pop that up. Thank you, Alan. You can tell I'm a Zoom Luddite, so that should be better. So they're not only available, but what we're still seeing is more of these frameworks being developed and added all the time. So you may well ask, why is a set of standards that's been around for 21 years worth getting excited about? It's a good question, and although I've used the AA1000 standards myself, as Alan was saying, for the better part of 15 years, I thought a good place to start answering this question would be to go briefly back in time to when the AA1000 standards were first created. So some of you on today's webinar may well remember the 1980s in various ways. Some people remember them from the music, some people remember them from the shoulder pads and the hairstyles and the fashion. Those of you who were around in sort of the business world at that stage might remember them for euphemistically being called the decade of greed, or at least the decade of corporate excess. Whilst Oliver Stone is not everyone's favourite movie maker, his somewhat cheesy yet iconic take on the 1980s, which was that movie called Wall Street, which I suspect some of you have seen, to me, that movie in some ways perfectly captured the business mood of that decade. Though the film portrayed the excesses of business behaviour to the nth degree, it simultaneously attracted and repelled viewers about where we had arrived at from a corporate perspective towards the end of the 20th century. But the 1980s was not all bad news from a corporate responsibility perspective. There were various positive changes in business beginning to emerge during the 80s, and these were driven by a variety of stakeholders and regulation. And these shifts included better management around things such as safety, around quality, and around environmental stewardship. But by the start of the 1990s, businesses were also being compelled to look at becoming more accountable for their performance and impacts, particularly from an ethical, a social, and a transparency point of view. And the drivers for this were largely actors such as regulators, NGOs, and in some cases, even shareholders. So corporate responsibility, or sustainability, as we tend to translate the concept these days, was beginning to emerge in the 1990s as a business consideration. And accountability and sustainability started to become entwined, if not in some cases, almost synonymous. So as with other business shifts, the need to be accountable and responsible was driven in large part by stakeholders and other parts of the market. And in response, many businesses started to look at what tools they could use to meet these expectations and perhaps be more innovative in their responses. So in terms of moving down the accountability pathway, it wasn't necessarily an easy thing for many organizations. For example, some organizations and businesses were looking to identify the veracity and the applicability of new reporting frameworks that they were being asked to consider or adopt. They were also looking at robust ways to manage and measure the changes needed in processes and behaviours. And if those behaviours and processes were found to be deficient, they needed to look at ways to lift their performance in those areas. But they also wanted to know who to turn to for reliable advice and solid guidance to help them move towards becoming more accountable and more sustainable in their practices and behaviours. Paradoxically, part of the problem was that even at that time, they had an array of possible pathways to choose from, but some of those pathways only offered partial solutions, or could potentially, in some cases, lead them away from where they wanted to go. So from this sort of background, or against this backdrop, this is where the impetus came for the AA1000 standards to be developed in the late 1990s. So what did AA1000 offer that helped translate expectations around organizational accountability into practical changes around business management and performance? Well, firstly, the AA1000 standards were designed to help clarify the answer as to what constitutes good practice around accountability. Secondly, the standards were designed to act as a foundation standard to underpin various pathways to accountability and provide a means of assuring the validity of those pathways. Thirdly, AA1000 could also be used by organizations as a standalone quality standard, basically to provide some means of assuring the quality of the accountability pathway that those organizations were choosing to use. And finally, two strong aspects of AA1000, I think, really propelled it up into a standard that offered a really informed and, I think, validated approach to accountability. One was that it drew on extensive global consultation. And the second thing was it also particularly drew on prevailing thinking and best practices related to social and ethical accounting. These best practices were identified by both adopters and providers of accountability tools, including academics, NGOs, and available standards and frameworks that were around at the time. One thing that became clear was that whatever was developed, whatever standards were produced around accountability, it was so important that they be both adaptable and accessible to change, and stayed in track as thinking developed, as stakeholder expectations changed, and as the market response evolved. So even today, 21 years after they were created, the AA1000 standards continue to mature in line with new ways of thinking and the changing demands of society. But one thing has remained a constant with AA1000 over these years. It continues to be a user-driven set of standards designed to be practical and relevant to the needs of the market. So to wrap up this historical perspective, the AA1000 series was largely created to support effective and meaningful stakeholder engagement by businesses and other organizations, to contribute to and support other accountability and sustainability related standards and guidance, to be able to be applied effectively in diverse operating environments and across different sectors, to be harmonious with other emerging approaches, and very importantly, to link to and support strategic and operational planning tools that were being used by the market when these standards were being applied. And finally, to make a significant contribution to building organizational accountability and enhancing overall organizational performance and transparency, particularly in relation to reporting and to responsiveness. So what will be interesting is, as we move forward in this session, is to find out how our guest speakers today can provide their view on whether they believe the AA1000 series has met these aspirations. So what I'd like to do now is to hand back to Alan, but just take the opportunity to briefly introduce Alan's background so you know who he is. So as Alan mentioned at the start, he's currently the New South Wales Managing Principal for Point Advisory. Alan's been in the game over 25 years and has held roles in ASX listed companies, management consulting and sustainability consultancies. He's been an active user of the AA1000 standards since 2008 and has applied them at least 100 times in supporting organisations in designing credible sustainability strategies, implementing effective risk management mechanisms, and delivering stakeholder inclusive materiality assessments. So without taking any more of your time, I'd like to hand back to Alan to explore some of the details of these unique set of standards. So thanks, Alan.
Excellent. Thank you, Paul. Thanks for that history.
Stop my... Yep.
And I've got
hand back to you.
Yeah, excellent. Thank you. I've got that up. Hopefully it's showing through for everyone. I want to quickly cover the what are they, and then really dive into some really practical examples of what I've observed as better practice in applying the standards within organisations in delivering effective sustainability management. So firstly, what are the series of standards? There are three standards that are standalone in and of themselves, but also work together. So going from left to right here, the accountability principles. They're a principles-based framework that guides organisations through the process of identifying, prioritising, and responding to sustainability challenges with the goal of improving long-term performance. They're quite central, and I'll show you in the next slide why. The stakeholder engagement standard is the second one there in the middle, and that supports organisations in their efforts to assess, design, and implement an integrated approach to stakeholder engagement and to communicate fairly and accurately with stakeholders and the public about their efforts. And thirdly, on the right-hand side there is the assurance standard. It's the leading methodology used by sustainability professionals worldwide for sustainability-related assurance engagements, including to assess the nature and the extent to which an organisation adheres to the accountability principles on the left there. as I mentioned, they do work together. So so on this slide, I just wanted to show you very briefly how they work together, and talk you through those, what are now four principles. And the principle of inclusivity is that notion that people should have a say in the decisions that impact them. Materiality, decision makers should identify and be clear about the top sustainability topics that matter. And the third, responsiveness, having been inclusive of stakeholders, having considered what's material, how does an organisation act transparently and credibly on those impacts, and where it can make the most impact. And that brings us to the fourth and recently added principle of impact. Organisations should be looking to monitor, measure, and be accountable for how their actions affect broader ecosystems and society. Having a look at the shading here, so the blue bubbles are our four accountability principles. Threaded through that are both the assurance standard and the stakeholder engagement standard. The assurance standard is designed to test an organisation's adherence to each of those principles, and those of us that deliver assurance are trained and understand how to undertake those tests and what to look for. And then connected to all of the principles is also the stakeholder engagement standard. And if you pick up the stakeholder engagement standard, you'll be able to practically see where stakeholder engagement can connect into each of these principles. But let's dive into some real meaty examples. So I want to talk through principle by principle. What does that actually mean in terms of leading practice? So if we look at inclusivity, that can involve a range of things, and this is not an exhaustive list, but something to just give you a bit of a flavour of what do we mean, and what do the standards talk about in terms of leading practice. What it can look like is mapping of your stakeholders, understanding who internally are your relationship owners of different stakeholders and stakeholder groups, and having some agreement or alignment in terms of what engagement approach is applied per stakeholder group. A stakeholder engagement framework with supporting guidance and processes can be really valuable for an organisation, and ensure that the organisation engages consistently with stakeholders that it affects or is impacted by. A stakeholder council or an advisory group, particularly valuable when it involves executives and or directors of the organisation, can be really powerful form of including stakeholder views. Site and organisational level stakeholder management plans, they can be really powerful and help really connect the thinking at a group or corporate level right into site level, operational level, regional level activity. And accessible and inclusive grievance mechanisms. And a lot of us who are now being involved in areas like modern slavery, the importance of grievance mechanisms was always something held as an important aspect of inclusivity in relation to the standards. Materiality, for those that know, there are a number of us that might be very interested in the materiality space joining us in the conversation. So important learnings that I've seen is the use of the 5-part materiality test that was developed as part of the standards, looking at materiality in a multidimensional way, which includes looking at social norms, peers, your policies, your own financial impacts, and your stakeholder views and impacts. A topic prioritization methodology that is defined and aligned to your internal frameworks. Stakeholder concerns, interests, and impacts are embedded as part of the assessment process. Your processes, your materiality processes, are integrated into customer, supplier, partner, community, and employee interfaces. And happy to talk to any of these in more detail if it comes up in Q&A. Mapping of materiality topics to external frameworks, mapping them to GRI, mapping them to SDGs, SASB, and in Australia, the ASX Corporate Governance Guidelines. Responsiveness is a third principle. The types of things that I've seen that are really valuable in terms of good quality sustainability management are things like the integration of stakeholder perspectives and material topics in your own risk and strategy processes. Your sustainability strategy being aligned to material topics, I've seen examples where sustainability strategies don't really have a congruence or a connection into your an organization's material topics or impact, or indeed stakeholder expectations. Internal policies and processes that integrate material topics, and that's really going down into things like product design, connection points into stakeholders like your customer service interactions, and how you think about customer interface. Development, documentation of management approaches. That's management approaches has been a key feature of the GRI since inception, and this is where the standards connect into that way of thinking. Cross-functional working groups. A lot of the topics around sustainability do require cross-functional input, and can really get a lot of traction with the right level of executive sponsorship. Impact, I think it's a really important principle that's recently been added, where I've seen some good practice is the articulation of how material topics are impacted by the organisation, and importantly, how those topics impact the organisation. Outcomes measurement frameworks to try to track and manage the impact and that you're creating or influencing, and how you're tracking strategic progress. Aligning impact and the value you're creating back to financial performance of senior management. Transparent public reporting of impacts and in accordance with GRI remains, leading practice. And sustainability linked financing, which is a welcome and growing area, and aligning management action to impact outcomes. So there, I guess, gives you a bit of a flavour of the types of things that I've seen are examples of leading practice responding to those principles. One of the things that we all need to deal with as sustainability professionals is actually making sense of what can be referred to as the sustainability standards soup. And this is adapted from an old piece of research, but it really tries to map out the different standards and where they sit on two dimensions. One being the topic dimensions of social, environmental, and economic sustainability, and then the axis on the top there I've got in terms of what we might be expected to be doing as organisations: sustainability policy work, accounting, assurance processes, and external reporting. And it can be quite a soup to navigate. So lots of different standards that cover different parts of these two dimensions, and you'll recognise some that you may work with, but really to show what I wanted to show you was where the AA1000 series of standards connect in. So really they try to take a broad approach. So the assurance standard, for example, covers to some extent the accounting, but importantly the assurance and the reporting aspect, and that's that dark orange box there. And then the lighter orange box, the breadth of the principles and stakeholder engagement standards is to cover the breadth of the processes that you would follow, and across all dimensions of sustainability. So from my perspective as a user of those standards, I've always found them relevant and valuable, regardless of what the topic is that I'm focusing on, regardless of the external driver or standard that's driving some work around sustainability. So even recently with the Modern Slavery Act in Australia, and the increased focus on human rights, I've been able to lean back on my learnings with the AA1000 principles, and it's particularly that notion of the impact, the inclusivity principle and impact have been really valuable for human rights conversations. So for that, I'm going to pass over to Alicia and quickly introduce Alicia, who's the General Manager, Sustainability and Technical Services with ISPT. She has over 20 years experience in the property and construction industry, spanning commercial, retail, residential, industrial and educational sectors. Alicia has held senior management roles across ASX listed and unlisted organisations, leading ESG strategy and policy development, and championing sustainability programs to deliver value for investors and customers. Alicia is chair of the Better Building Partnership and is also a committee member of the Property Council of Australia's National Sustainability Roundtable and the Green Building Council of Australia's Industry Advisory Group. So with that, I'll pass over to Alicia to take us through her perspectives on the standards.
Fabulous. Thank you, Alan and Paul. I have been taking notes. It's always great hearing from you both, and I can't wait to hear from Glenn. So I wanted to introduce ISPT. and my role within the organisation. So I'm responsible for the development and implementation of ISPT's Environment, Social and Governance, or ESG strategy, as well as responsible for the engineering operations of ISPT's $19 billion property portfolio. At ISPT, we invest in property for some of Australia's largest industry superannuation funds, and we take a responsible approach to investing, meaning everything we do is underpinned by our commitment to ESG excellence, and it's something we take very seriously, given that we're investing on behalf of more than 50% of working Australians who have their retirement savings invested in our properties. So today I wanted to provide some real life examples of how I have used the AA1000 series of standards for strategy development and stakeholder consultation. I've been in a position of starting a strategy from scratch, as well as refreshing existing strategies. And the AA1000 series of standards can be universally applied, irrespective of where you're at on your journey. You can pick them up off the virtual shelf. They set out an easy to follow, non-technical blueprint for strategy development and inclusive strategy consultation. The standards are a strategic tool, as well as a framework to engage meaningfully and identify and then focus on the issues of greatest importance to stakeholders. For ISPT, our stakeholders are our investors, customers, and our community. And we're really proud to be able to have a strategy that seeks to deliver greater value for them and to their business and their needs into the long term. So the first example I wanted to provide is around materiality. And thanks, Alan, for that overview of materiality. I was going to recap that, but I think that your summary of it as being a multidimensional process is perfect. So my value add to that is that really it gives you the opportunity to give you a balanced view of the issues at hand. And the importance of removing the subjectivity or bias from this is absolutely critical, which can be led by an imbalance of stakeholders or an imbalance of subject matter experts who are at the table representing, let's say, a singular view. So the example I wanted to provide for an organisation I've worked for, not my current organisation, and the materiality process consisted of asking the sustainability managers what's important for materiality, what's important for the business. And only these sustainability managers were consulted. So the feedback that came through that process was that everything was important. There was no delineation, there was no focus or opportunity to hone in on the current and emerging issues. And it clearly highlighted to me the need to get the right stakeholders in the room, or as I said, a balance of stakeholders representing those current and emerging issues, as well as getting that representation from internal stakeholders and external stakeholders. And noting it's not just stakeholder interviews that's part of that materiality process. Alan, you mentioned that could be internal document reviews, policy reviews, review of board papers, investment papers that are not sustainability term documents. It includes industry research, including what's happening across peer organisations. So the beauty of this process is that following the AA1000 stakeholder engagement standard is that it gives you that process. It provides that independent overview of the outcome, and it allows you to then objectively view feedback. The thing as well with materiality and that stakeholder consultation piece is that once stakeholders are asked what's important to them, they want to know that you've heard them and are acting on it. And that accountability and transparency piece is clear to maintain the trust in that relationship that you have with the people who are effectively a key part of your business. The second example I wanted to provide is with ISPT and the strategy process that we have just been through from the beginning of this year to refresh our 5-year sustainability or ESG strategy, and including our materiality process that really was the front end body of work that drove then the strategy development. So going into the strategy refresh, we've had a 5-year sustainability strategy in place, and it's delivered exceptional outcomes. We have some industry leading buildings in terms of wellness and comfort. We have a national solar rollout, high performing buildings from an environmental perspective. But we've almost maxed out the environmental performance of our buildings across the base building. Irrespective of the work that we've done on upgrading our buildings, as I said, on rollout of on-site renewables, we've improved our processes, our management practices, our data collation, and our data coverage across the performance of our buildings. So we recognised before starting this strategy refresh that in order to push the performance further, we must shift the focus of our strategy to be whole building focused, and we must then engage with our customers on their behaviours and the way that they use our buildings so that we can continue to improve the performance of our buildings. It also meant that we needed to take a systems view across the entire building, not just our customers, but look across our supply chain to the suppliers of products and materials to our buildings, to look at the way that our buildings, as I said, were managed in terms of the environmental impact and utility management, etc. And as I said, work very closely with our customers. So this was our mindset going in, that we had to shift from base building to whole building, and it meant that we needed at some point to have a conversation with our customers on coming on board with our agenda. So through our materiality process, which did include consultation across every sector that ISPT represents and a variety of stakeholders within each of those sectors, we understood that our customers want transparency on building performance to allow them to vote with their feet and align with a building that becomes a platform for them to execute their sustainability strategy. What a beautiful opportunity that transpired. Instead of thinking that we then had to roll something out and go to our customers and say, hey guys, please come on board with our journey. In that very rich consultation phase, we learned we could actually do it together. And we had willing participants who want to work with us in partnership, in an open dialogue, and we can create a scale of outcome that neither party could achieve if we tried to do it alone. So what a great example of how really value-based these standards are and the outcomes that they can create in terms of mutually beneficial and shared value outcomes. Similarly with our engagement around ESG with our investors, the materiality process included a review of what's happening in our investor landscape. As I said, we're fully funded by superannuation. There's a lot of money that sits within Australian superannuation and a lot of responsibility for long-term returns. Through that materiality piece, it confirmed that our investors see ESG as a key tool for managing current and emerging risks and a lever for long-term value creation. That ESG is business critical and no longer a nice to have, and that our progress is intrinsic and critical to their progress and performance. They also saw that ESG is a key building block, particularly with regards to community resilience in a post-COVID recovery. And you may have seen on the televisions recently, there's been a lot of ads running around the responsibility that superannuation in particular has for job creation. So we are a deliverer, again, of that ambition that our investors hold. So for ISPT, ESG is a critical business priority, where material ESG risks like climate change and modern slavery need to be managed as a key performance indicator by the ISPT board. So where has this taken ISPT? The materiality process reinforced for us the key areas of focus for our projects, our flag on the hill targets to 2025 in our ESG strategy, one being around climate change. So climate change through our materiality process was identified as being the most important issue that our stakeholders expect ISPT to act on. And I'm very pleased to say that ISPT has taken immediate and direct action on climate change, and as of the 4th of November, we were certified carbon neutral across our owned and operated properties and corporate footprint. The ESG strategy was approved unanimously by the board on the 11th of November. It sets a vision and pathway for ESG excellence to 2025, and excellence for ISPT is defined by 7 flag on the hill targets that are aligned with the most material issues. It's underpinned by a partnership model that focuses on whole of building performance and a governance framework that holds us accountable and provides transparency. The governance framework includes responsibilities that are set out across all functional areas of ISPT's business, including the board. And it's aligned with international standards, GRI, and the United Nations Sustainable Development Goals. Whilst we're not listed, we know that this information is important to be published publicly, and we'll be sharing our strategy and progress against our flag on the hill targets on ISPT's website. We're in the final design stages of that, and they should be live on our website in 2 weeks, coinciding with the launch of our annual ESG report. So to summarise, the outcomes that I've personally seen by applying the standards is that the strategy is grounded in the most important or material and impactful stakeholder issues. It creates inclusive shared value opportunities where stakeholder and business interests are balanced. And the process gives rise to clearly identified current and emerging risks and gives you an order of priority of responsiveness to address each one. For ISPT, it positions us well going into 2021, following 2020 and a year of significant uncertainty. We have a clear and strong leadership aspiration backed by our board and investors to be delivered through bespoke programs and engagement with stakeholders to identify mutually beneficial opportunities. It's going to be a great year. Thanks, Paul.
Thanks, Alicia. And look, congratulations again to ISPT on that. I mean, that really is a significant achievement, particularly these days, you know, where we are a country that is, I think, still coming to terms with these opportunities. And it's wonderful to see organisations such as yours actually step up in a little bit of a policy vacuum, I must admit, from personal point of view. But that's a fantastic outcome. So thanks, Alicia, and thanks so much for giving us the benefit of your experience with the AA1000 standards.
Thanks, Paul.
It's my great pleasure now to introduce someone who I not only consider a real pioneer, and I know that the word pioneer is overused these days, but Glenn Frommer genuinely is a pioneer. He's also a great friend of mine. Glenn has that unique combination, I believe, of being both a visionary and a pragmatist. And they're in short supply in a lot of cases, but they're absolutely essential to us moving sustainability forward in a way that meets the needs of the market, but also at a pace that enables things to move forward so we really can tackle the challenges that everyone on this webinar is all too aware of. So Glenn has been in the sustainability and environmental movement for over 30 years. Prior to founding his consultancy, which is ESG Matters, Glenn held senior management roles with the Mass Transit Railway Corporation in Hong Kong for over 20 years. And he's also assisted with the Hong Kong and Singapore stock markets in terms of developing their ESG reporting requirements. And I first met Glenn when he and I were both on the development of the GRI G4 reporting standards. We were both on the Management Disclosures Working Group. So for those of you who have had an untoward experience with the management disclosures in G4, you can blame both Glenn and I for inflicting those on you. But now look, Glenn, it's my great pleasure to introduce you, and I'd love you to provide just the benefit of your experience around accelerating higher performance through applying the AA1000 standards. So over to you, Glenn.
Thank you, Paul and Alan and Alicia. Good afternoon to both of you. Thank you for the opportunity of addressing the participants today. I've been using the AA1000 standards since before they were the standards. My start to this was at the Airport Railway back in the 90s in Hong Kong, when we were building the railway to connect the new airport, Chek Lap Kok, with Central Station. The MTR decided then very soon after to go public and then merge with another railway company in Hong Kong, and then to move to franchise operations in Melbourne and throughout Europe. And my job was to take that state-owned Chinese enterprise and make it soft and cuddly. So my work has always been almost outside the company, after having taught people inside the company what they should be doing. And I'd like to talk to some of that today. And I'd like to do it in terms of applying the series set that Paul and Alan talked to earlier before. So if I could have the first slide, please. I mean, this is essentially the start. This is the main standard that people would go to, the stakeholder engagement standard. The cycle that's looked at is typically a Deming cycle. We start up at the top with identify who we want to engage with, move towards the 3 o'clock point, where we look at how do I prioritize who I want to talk with. Then at the 6 o'clock point, look at how do I design engagements for each of these multiple of stakeholders, finally engage with them, and then lastly, monitor and report, not only to the organization that's providing the funds to drive this process, but also to each of the participants in the process. Now, I think it's very important at an early point to recognize that while the organization is trying to achieve a set of goals, standards, motivations, with putting in place a set of standards, AA1000 or any other ISO standard as they wish, we're dealing with a business, and we're dealing with trying to improve businesses in the most efficient way. Essentially, we're dealing with people, their aspirations. So this is a very broad portfolio of issues. And of course, most of us that grew up within companies don't actually consider, well, what does my widget, what does my service represent to the people outside the company? I just want to sell more of them. So we need a change of mindset, and that's where this goes. So if we look to starting to identify, if we just go back one slide, if we look to identifying the different groups that are involved, these could be the customers, staff, financiers, partners, regulators, the NGOs. It's that whole portfolio of people that have an interest. It could be international partners as well. And then how do I prioritize? What makes one partner more important to others? And I typically use the chart that you see here, where I judge the level of interest that each of these parties bring to my organization versus their ability to influence my organization's behavior. And I can typically get a board to sit down and within 20 or 30 minutes, have a discussion with a bunch of post-it marks, get them up on the board, and have them make the chart that you see in front of you. And then it's a question of, well, what are they interested in? How can we work with them? And there, to design the engagements, it's important to be able to allocate responsibility for those activities, give them the proper resources, develop programs, and be able to monitor the outcomes. And of course, the next step, engaging. It could be meetings, it could be webinars, it could be site visits, it could be newsletters, it could be taking someone out for a coffee or a dinner and having chats and the like. And the monitoring, reporting to a stakeholder or reporting to an organization are very different. What do people want? Do people have the trust in the process that you're putting in place? The accountability principles and standards gives the support and background to each of these steps. Let me explain in the next slide. Here we have the same circular flow, and I've added on the accountability principles, the AA1000 APs. And you can see 4 principles between identify and prioritize. I have inclusivity. Following prioritization, I have materiality, between engaging and reporting responsiveness, and in the center of this, I have the impact. The assurance part of this is going to be looking at documenting and backtracking for each of these four principles. And we do that in the following slide. So under inclusivity, we ask simple questions. Who did you include? How did you decide who should be included? What questions did you use? What kinds of skills were involved? Under the materiality side, how did you decide what was a priority interest? What's the materiality definition you came out with this? And what actions do you feel that you need to take forward? On the design engagement side, identify the people that are doing the work and the resources that were made available. One cannot have an in-depth engagement exercise without proper resources. How do you prepare the staff? How do you train them? Certainly dealing with an Aboriginal community is very different than dealing with a mining community, though the interest between the two may be very much in tension. And then engaging. How do you engage? How do you actually get the people to talk to each other? How do you ensure that the people on the one side speak to the people and are understood in people on the other side? The Truth and Reconciliation program that was put in place after Mandela became president in South Africa is an excellent example of the kinds of preparation and process that's needed for something like this. And then you need focus on the outcome and what are the next steps. As far as the responsiveness, how did you report? Who did you report to? How were the reports made? Are there written documents? What decisions were being made? And it's important to have the documentation, the black on white, boring memos, radar charts, the bar charts, showing resources used, how did you get there, what kinds of consensus, what kinds of things that need to be resolved in the next steps. And it's important because if we're looking at improving impact, improving our business, improving our workers' skills, we need to confirm, we need to document the materiality and the responses that are involved in the process. And the three steps that I've now outlined with the stakeholder engagement standard, the principles, and assurance can be used first to build, solidify the process as I've outlined, but also to direct motivation for the workers, the supply chain, the value chain that's involved in delivering the service. Remember, we're focused on improving efficiency. We're looking at improving our product. Now, let me give a little bit of a wider understanding because we're talking about engagement as almost a one of, or something that you tap into once, maybe twice a year. There's actually more to this, which is summarized in the next slide. The work that I've done links stakeholder engagement, which you see on the right-hand side, and the AA standards, with that for enterprise risk. All of us understand risk. I believe that you have risk outlined in some of the exchange issues that are reported in Australia. One tends to look at exposure in terms of likelihoods and consequence. One can have many discussions as to how risk is categorized, whether it's political, legal, reputational, environmental, and the likes. But this process of taking stakeholder engagement, which is typically a corporate public relations function, and combining it with a financial or a legal system within the house gives an additional purpose, an additional focus on the purpose and additional use of the purpose of the company. That becomes clear. Now, certainly in these times with pandemic, we've looked at how companies have been reacting to that. I'm calling in today from Copenhagen, and Europe is in very heavily involved in the second wave. Many of our countries are closed down. And how companies are reacting to the pandemic, how they're supporting the staff and the family. It's no longer an issue of checking up on a worker. Now it's checking in. How are you? How's the spouse, the children? How are you working from home? Those companies that are shouldering this change of environment, the change of putting their own employees first, are going to have that much more improved business and cohesiveness. Now, looking on the risk side, there's many ways that companies use risk, and I've listed a few of the alphabet soup that Alan listed before: GRI, SASB, CDP, integrated reporting, TCFD, and there's plenty more. There's COSO, other organizations that give you tools to categorize and assess risk exposure. The engagement is the external view of these internally generated perspectives, and the engagement confirms the materiality and the response. Are they fit for purpose? Are they working? Are they efficient? This introduces something that's just coming up now in Europe between GRI and SASB, which they refer to as the double or dynamic understanding of materiality, where issues can flip very quickly in and out of being material, and whether one needs to consider a different perspective for those material issues. The engagement and assurance processes create the opportunity side to risk. Risk isn't just reducing likelihood and consequences. It's also saying, let's not do it this way. Let's do it a different way. Let's use the co-creation from the stakeholder side and build alternatives to those risks. Now, the AA assurance engenders leadership behavior. And if we are not gaining trust, clarity, and momentum out of our work with the AA standards, we are not getting the optimum value out of this. Now, there are clearly a whole different set of skills, and I'm sure that Paul, Alan, and Alicia can give you a lot more detail and help you develop the skills involved. Then moving on to reinvigorate, sorry, if I just can have the last 2 points, reinvigorating the staff. We're taking staff from the front lines and moving them from engagement inside the company. And that staff invigoration will reignite the corporation's purpose and accelerate to higher performance. And that's why these are moved. Now, I'd just like to take 1 or 2 minutes and speak to impact investing, which is something that the AA work is also focused on. And I've plotted here on the horizontal axis, limited or no regard for ESG on the left-hand side, and on the right-hand side, societal challenges with lower returns, higher risk. On the vertical axis, on the financial return, the top of that is market return, and the bottom of that is negative return. And I've indicated with the blue boxes up top, the different kinds of philanthropy and impact investing that you see. And what we're actually seeing in the field is that people are starting to use tools like the SDGs that you see on the right-hand side to identify pockets of where they want to focus their ESG investing. This is moving then into the FTSE, into the Dow Jones Sustainability area, to Robeco SAM, being used by MSCI, Sustainalytics, and others of providing additional support. But again, we're focused on data from the internal processes in the company. When you start looking at the external purposes, you're looking at specifically directed engagement processes, which is indicated by the blue triangle on the middle to the left-hand side. And you have companies like Hermes in the UK that have a very broad engagement process, looking at how do we take the data, how do we take the processes that companies talk about, how can we use a documented, backtracked, assured process to give us higher confidence in what these companies are achieving. So just let me then summarize on my final slide a few points. The AA standards, as we've presented here today, focus on stakeholder engagement and assurance. These impact through inclusivity, materiality, responsiveness, and the impact, as I said. The standards augment all the other standards and reporting frameworks, GRI, SASB, CDP-IRC, TCFD, the Dow Jones, the FTSE, and all. The AA standards are the only set of standards that consider the respective positioning of how stakeholders view the company. All of the others, and this includes the ISAE 3000, focus on the internal processes and the data being developed and reported by the company. The AA standards are the only set of standards that can give you the best practice approach to engagement. And lastly, the AA standards are an attempt to reinvigorate staff, reignite the purposes of your company, and accelerate to higher performance. And let's face it, we have to have the performance, and we recognize that we have indeed limits to growth very much in place today. Thank you.
Thank you, Glenn, and look forward to diving into some of your points during Q&A. Appreciate the insights. So I guess a closing slide before we go into Q&A, and then just a call out for those that do want to ask questions. Feel free to post them on chat, or be ready to unmute yourself. So this is our last slide, and just really giving you some pointers as to what you could use and refer to in terms of the business case for adopting and using the AA series of standards. So firstly, for those involved in sustainability reporting, it's a framework that allows you to demonstrate meeting the GRI standards. Both their reporting principles of quality and content. Materiality we've spoken about at length. It's quite a really useful, invaluable tool to help you with your materiality processes. That holistic view of impact, just as Glenn mentioned, really understanding stakeholder impacts and that outside view in of the organization. Facilitates responses to different frameworks, particularly the impact-led frameworks. Visibility of emerging issues. I've found it really useful that by applying these standards, we get earlier visibility of the emerging issues on the horizon. Risk management, that integration of the principles into management systems and material topics into risk management processes is a real valuable piece. Using the principles as you develop strategies, and we heard from Alicia talking about their strategy development process, but how does it actually help you identify those gems? And really, I always talk about that with my clients. Where are those gems we can uncover in engaging with our external stakeholders? And peace of mind. I actually think apply as a director on a board, I would feel a lot more comfortable if my sustainability management team was actively using these standards, because it gives me a level of comfort that things aren't being missed, and that we are looking at all the kind of potential risks and opportunities that will influence our future success. And then quality. It really acts as a terms of reference for quality sustainability management practice across an organization. So there's a few insights from us that you could use when talking about the value of the standards. So with that, we'll open up into Q&A. So we've got a good 20 minutes to get into a few things. So, and I'd hazard to say no question is too meaty or too difficult. I think we're happy to have a go at answering any of your questions, or even taking any of your points or perspectives on your value, the value you've seen in the principles.
Well, Alan, just to perhaps open the conversation up, I imagine a few people on board today haven't had much exposure to the AA1000 standards in the past, and one of the questions that I would think some of them may have is, where do I start with these standards? How do I even know that I need to use these standards over and above what I'm doing at the moment? So perhaps for you and Alicia and Glenn is, what might be the trigger for me to use these standards? What might be the signs that these standards might add value, and what might be the starting point other than downloading the standards from the accountability website?
Sure. I can jump in firstly, and then let Alicia and Glenn jump in as well. Look, I think the triggers for knowing when, whether you need to, re-engage and use the standards can be multifold. So it can be as extreme as, wow, I've just blown up 46,000-year-old caves that are sacred to Indigenous communities, to trigger the need to really sharpen your pencil on stakeholder engagement. Could be as extreme as that, or it could be as subtle as, well, is our sustainability strategy covering off effectively across the key ESG, environmental, social, and governance topics that are relevant to our organization, or indeed even getting an increased spike in complaints in a particular area through your call centers. So it could be quite varied. In terms of where to start, I would always recommend reading the very accessible principles document, which is really relatively easy to read and understand how the principles work and their intent, and then diving into different aspects of the stakeholder engagement standard, which is quite comprehensive, and you could dive into, and I think Alicia made this point during our prep on this session, was you could dive into any part of it and find something that might be relevant to you. You don't need to have read it from cover to cover, and actually identifying bits that might be useful for you. So they could, to a couple of perspectives there. But Alicia, do you want to jump in?
Great example, Alan. And we've had an internal conversation around the importance of our social license to operate, and some recent examples in Australia this year of where two organisations perhaps have lost their social license to operate, and that the value is not realised until it's gone. So I think that any time is the time to pick up these standards. If you're looking at your revenue, if you're looking at your strategy, if you're looking at tenant attraction and retention, if you're looking at how you perform with your investors, this standard could be applied to any aspects of business management, really. It doesn't even have to be sustainability. And I think that if you're looking to shift the bar in any way, if you're looking to create further value or reduce risk or have greater consultation, these standards do set that pathway for you to be able to achieve that. And I absolutely would endorse them for anything in a business context that you're trying to do, to set out a very clear non-technical pathway and to give you direction on how to navigate any of that consultation, and then the development of an action plan against those issues.
Let me just add another perspective. When I talk to multinational groups, I have a very simple question, and that is, how do you know that you are compliant to the local laws of your jurisdiction? And the typical response is, well, we haven't been fined yet. That's not exactly a comforting response. And then the continuation of the discussion is, well, who has the list of laws, regulations, policies that your company is run under? And some people go away and they think who actually does, and not many do. And then they come back with the list and they go, well, who's responsible for ensuring compliance to the law? And then you have the next discussion. What's the consequence of you not being compliant to the law? Now, we haven't talked here about any aspirational ESG directions, any SDG goals or targets being carbon neutral, none of that. It's just Let's be compliant to the law. Let's have a structure in place. Let's let our stakeholders know we comply with the local laws of the jurisdiction. And this reflects a bit on what Alicia's point is about companies losing the social license to operate. Every company must have that discussion. If you're not, you are liable. And then from there, you can start building with those skills, tools, and processes to looking at this sort of engagement type of discussion. You build out inclusivity, you build out materiality, you build out responsiveness, and you look at a larger and larger portfolio of impacts of the company. So it's a very generic discussion, and it's a much more important discussion than it was 1 year, 2 years, 5 years ago, because we're running out of time. There's an urgency involved here.
Thanks, Alan.
Excellent. And yeah, no, some of those points, Glenn, really resonate. I mean, the number of times I've had the same experience, and just not having a list of which laws and regulations do we collectively as an organization need to comply with. There might be a pocket, owned by the company secretary. There might be a pocket owned by the sustainability team, a pocket owned by product design. So yeah, it can certainly resonate. And when I speak to my clients in terms of sustainability strategy, we have a conversation around positioning. Where do you want to position yourself? And we actually talk about the fact that regardless of where you position yourself, you could be a leader, including complying. So you could be a sustainability leader simply by ensuring compliance and being able to evidence that. So I think that's a really, really important point. One of the other areas I'm interested in is the notion of shared value has been a conversation that's been with us for a while now, and I certainly talk to my clients about being a leader from a shared value perspective. And I'm just curious about, Glenn, Alicia, Paul, your views on how the standards contribute to a shared value context.
So I can go first there, Alan, and then pass to Glenn and Paul. So I gave one example of where, in following that inclusive consultation process, we've actually been able to identify a shared value outcome for ISPT and our customers by asking them what's important, hearing from them around what their strategic targets are, and then looking at ways that we can support each other. Now, in terms of a building's environmental footprint, the electricity and water that are used by the base building, so that's, let's say, for your air conditioning, so a commercial building, your air conditioning and your lifts, both energy and water is about 50% of a building's environmental footprint is just in terms of those base building. A fair whack of a building's environmental performance comes down to the occupants that use the buildings, whether they're using your end of trip facilities and enjoying a beautiful spa experience in your end of trip facilities, or whether they've got a pie warmer and an electric blanket under a pie warmer in the kitchen, electric blanket under their desk because they want a hot pie for lunch and they want to keep warm during the day. So those behaviours are contributing to our overall environmental footprint. We have a lot of engaged customers, a lot of corporates, a lot of retailers throughout Australia who are also committed to a sustainable future. And simply unlocking that question, or asking the question and unlocking further value there in our relationship together. As I said, we've been able to identify where both of us in working together can contribute to their sustainability aspirations and our sustainability aspirations, create that shared value outcome, and then to be able to go further than either of us could have done if we were trying to do it independently.
That's great, Alicia. I was peripherally involved when the MTR started to manage the Melbourne trams years ago. And there was an issue with an area by I believe it was a methadone clinic, where there was some unfortunate accidents that slowed down traffic. And there was a decision that was pending to build a very large fence. And instead of building that sort of protection barrier to the trains, people got the idea, well, let's try to educate people of people's value and protecting each other. And I believe that in Australia, you're aware of the cartoon and the songs regarding fun ways to die. That's where it came from. That's the shared value I just like to highlight. So you can generate an awful lot of very good stuff by being quite creative and quite intelligent when engaging with the different stakeholders. So just one example.
Yeah, I think that's a good one, guys. And maybe to summarize the point that Glenn and Alicia are making is that how would you possibly know what value matters to your stakeholders if you're not asking them? And I think over the last 25 years, corporately, we've moved a long way from this idea of stakeholder management, which is basically saying we know what's best for our stakeholders and we're going to manage them accordingly, to a much more inclusiveness footing where we actually say we're going to move from management to engagement, and then we're going to move from engagement to responsiveness. And, you know, when you think back around the way corporations have treated stakeholders in the past, which is we know what's best for them. They don't know what they want, or they just want too much, or we don't think what they want is legitimate. This truly creates a platform for not only listening to your stakeholders, but engaging them and also involving them in the solution. And I think this is a critical step in the 21st century, is stop seeing stakeholders as a threat, stop seeing them as the barbarians at the gate, which was often the case back in the 20th century, and moving towards a footing of saying, yes, we not only want to listen to you, but we want to involve you in solving the problems. And when you look at the best performing companies these days, they are the companies that bring the stakeholders inside to the tent and say to them, we've heard you, we know what you want, but we can't do it on our own. We need you to work with us to make the solution to the problem that you're telling us real and achievable. And AA1000, particularly the principles and particularly the stakeholder engagement standard, is the key, for me, the key way to make that step from management to partnership with stakeholders around resolving key problems, not just for the business, but key problems at a more societal and a more national level as well.
Good points, Paul.
So, Alan, another question in advance is, why would a company obtain AA1000 assurance, or why would an investor expect a company to undertake this form of assurance in terms of managing their decisions and choices around where to invest?
Yeah, that's something we've spoken about quite a bit in preparing for this session. So it's interesting when you look at assurance, I guess, the role that it plays, and particularly in sustainability, in the sustainability field. It's I guess it's assessing and confirming the veracity of your qualitative disclosures on how you approach and respond to different issues and opportunities, as well as the veracity of the data and the performance information you're providing in an annual disclosure. Now, if you're just looking at the data, then you're going through internal processes. You're looking at the quality of a data management collection and information system, and then looking at the processes of how that information gets in there. What it then starts to, and you can get the tick on that, which is great. What it doesn't tell you though is those blind spots of, have I actually understood what all my risks and opportunities are? Have I gone through a process that tries to at least uncover them and tries to respond to them? Have I thought about that in my risk management processes? Does that information get up to the risk committee, for example? is management accountable to implement processes and controls to manage those things? And that's the value that I see. I suspect there's still an information gap and a knowledge gap in investors, for example, don't understand that there are different types of assurance that can be provided for, particularly for ESG or non-financial disclosures. But I think that's an important point, that with these standards, as well as the assurance standard that sit within them, that is quite a powerful approach. And there's been lots of organisations in Australia and abroad that have applied the AA1000 assurance processes when they obtain third-party assurance. Alicia, do you have any points there?
Yeah, look, I think assurance is critical. It's almost one of the tools in disclosure that you're holding yourselves accountable, and you're giving that confidence to your stakeholders that what you've done is right, you've heard, you've acted, and you are committed to improving and going further. Because what happens with the insurance process is you get the management recommendations as well. It's just not a green tick in a box and says, good on you, great job. You get that, but then you also get the management report to say, well, here's some areas that you could also improve. So it sets a way for you to then go even further. And I think in this area, as I said, my experience hearing from our investors and other stakeholders is that ESG is business critical. It is integral to investment. It's integral to risk management and long-term returns, and applying the same level of rigor that you would to a set of financial accounts, you must do the same then to your ESG accounting.
Let me add a slightly different perspective. I've been involved in several mergers and acquisitions, and everybody is looking to pay the cheapest amount to buy something, or if you're on the other side, get the most money out of a sale. And getting these kinds of assurances or not having the assurances gives the opposing side a tool to either talk the price down or talk the price up. So, and we're not talking about small sums of money here. These can be spun in those kinds of M&A discussions for billions of dollars. Companies today recognize, perhaps on the back of the pandemic issues, the need for coming to terms with disruption and transformation. The business ways that we've done things in the past are not going to be maintained into the future. We are going to have to change. Now this, what we're running through with the pandemic, is a dress rehearsal for climate change, whether anybody realizes it or not. And what we have to start considering is, how do we start improving each of our staff members at speed so that they have the tools, competencies, skills for dealing with the next crisis, the next pandemic, whether it's pig-based, bird-based, COVID-based, water-based, either too much or too little in the case of Australia. So there's a whole portfolio of reasons of why it's necessary, and the cost benefit of getting the kinds of AA assurances we're talking is huge. Not in the cost side, but the benefits.
And Paul, I might touch on a tangible example of one organisation I've provided assurance for over the years. Things that we were calling out in their management report probably a decade ago are now playing out as issues they're needing to face into, and which are having real commercial impact. So I think that it kind of a practical example of the process being able to shine a light on areas that that may bubble up, or at least, if the organisation doesn't face into today, will at some point need to face into and find a solution for that's acceptable to stakeholders. So I certainly have seen that value firsthand through our client work.
Yeah, it's a good point, Alan. And when we've used AA1000, we've also found it a way to predict risks coming over the horizon, not just current risk or risks that might emerge tomorrow, but risks that in some cases we didn't even know the sector we were working in was vulnerable to those risks. And to, in some cases, even be able to map those risks over time. So from year to year, as you're working with the organization, you see how the horizon of some of those risks is changing over time, and whether in fact that risk, which was maybe paramount last year, has receded back over the horizon, or whether some of those risks that looked like they were in the distance last year are suddenly a whole lot closer this year. So that's one way that certainly we've used the standards in terms of future risk management. So perhaps, Alan, we might just check in with those listening in just to see if anyone would like to volunteer if they've had any experiences with AA1000 so far, good or bad. So is anyone feeling particularly brave and they'd like to unmute themselves and just relate their experiences with AA1000? A very shy group today, which is fine. Yep. All right. So Alan, was there anything else on the Q&A side that you'd like to cover off, or should we just move to wrapping up?
I think one other point to potentially discuss is the connection into what we're seeing with exchanges. So that ASX, corporate governance guidelines, and Glenn, if you're not familiar, principle 7.4, which relates to communicating ESG or environmental and social related risks for the organisation. I think that's an important development that's been around with a number of the iterations of the corporate governance guidelines. Just wanted to talk about that. I guess my perspectives, I'll share one perspective, is the importance of aligning your materiality processes and what topics you identify into that way of thinking. For a number of reasons. So both to demonstrate to stakeholders that you are thinking about those risks, but also to support the connected disclosures. So if it's disclosing those environmental and social risks in the operating and financial review of the director's report, or if it's making it quite clear in your own materiality disclosures within your sustainability report that this is a potentially financially important material topic, in addition to being material to stakeholders. So I think that's an important aspect, and that these things don't sit in a vacuum. You don't just do one materiality exercise and then walk away from it and go and do your ASX disclosures. So I think there's merit in really using the standards to help you know and feel confident that you are meeting the spirit of what that principle is looking for.
Yeah, I would just like to connect to that, to one of the bees in my bonnet over the years, and that's the remuneration paid to the directors and board people. If we're going to get an adequate representation and resolution of some of these risks, they must be connected directly to the remuneration for the directors. We must be able to see in the disclosure of management what decision boards are taking to resolve the issues that the risk throws up, that the engagement process throws up. Having Mr. Fink from BlackRock write a letter to all of his shareholders and asset under management groups saying how important ESG is, without saying my salary is 60% dependent on achieving carbon neutrality by 2050. But if you don't tell me it's not important for you, I want to see how your pay is related to achieving these issues that we have identified as being absolutely critical to the businesses that we've raised. Yeah. Don't see it.
Good point, Glenn. Couldn't agree more.
And I'll just add to that, I was very excited when I saw that revision come through last year with recommendation 7.4, very clearly saying that directors had responsibility for environmental and social risks, and not just responsibility, that those disclosures in the annual reports were important. I think that 10 years ago, sustainability wasn't cool. It was something that those environmental people did. And as I said, now, 10 years later, even though it was just as important then, it is now business critical. And the standards do set out a way to be able to report, to be able to consult, for directors to have comfort and to know that those risks and opportunities are being managed. So it's a great time to be working in sustainability at the moment.
Well said, Alicia. All right. Now, should we look to wrap up? Alan, I might just ask you to move on to the next slide, if that's okay. So guys, look, from here, just firstly, thank you to all of you for participating today. I hope that you've found what we've presented to you both valuable and thought-provoking. I'd also just like to quickly thank our guest speakers today, both Alicia and Glenn, for providing their time and their expertise and their accumulated wisdom on applying the AA1000 standards. Moving forward for you is I'd urge you to visit the Accountability UK website. And what you'll find on this website is an abundance of information around both these standards, what's in them, how they can be used. And very importantly too, you can actually download all three of those accountability standards free of charge from the website and have a chance to have a look at them and just perhaps, as Alan pointed out, is there are parts of them that you may not see any immediate connection to, but there's likely to be other parts in those standards where you may find there's a value add to be made in terms of some of the processes or some of the practices that you're looking to instill or adopt in your organization at the moment. So I'd urge you to visit that website and at least download the standards free of charge.